tres.
Hello. Welcome back to another episode live. And today we're going to talk about some of the reasons why buying a house might be a little bit of a challenge for you. And it all has to do with insurance. Regardless of whether you plan on buying or whether you currently own properties, this is something that you definitely need to pay attention to. So first things first, let me go ahead and jump into the article that I wanted to share with everybody today. Let me see here. All right. So today, what are we talking about? The hidden driver of soaring home insurance costs. And all of this had a lot to do with the issue around reinsurance. So a looming round of reinsurance renewals could signal slowdown in premium increases. But in the meantime, right now, everything seems to be really expensive. What is reinsurance? Well, we're gonna get to that later. So first off, I want to get started with the story right here, just so that everyone can, picture themselves whether they relate to this individual or not. So the story goes like this. Joshua Enloe has gone from home insurance paragon to pariah in just 3 years. Since 2021, the 36-year-old Texan has been twice dropped by insurers, and his annual rate has almost tripled to $13,000 from $5,000 before ending up with a bare bones state insurer of last resort. We're going to cover all of these concepts about insurance of last resorts in a minute. But long story short, insurance can't fire you. Insurance do have the power to choose who they want to work with. And they might be in business with you this year, but they might be able to just simply say, hey, I don't want to work with you next year, and bye-bye. And that has actually happened to me twice with my then 17-unit portfolio. So what was the offense for Joshua? Like, why is he being fired by the insurance? Well, it turns out that he was just simply living in El Lago, a coastal suburb of Houston. In the 1960s, so the house was built in the 1960s, and the 2,200 square foot home shared with his wife. And it's just, this is just something to consider, because I know that when we take a look at the issue around insurance, a lot of people tend to think, oh, it's just because it's happening because of the natural disaster. This is only happening because these properties are located in coastal areas, and it is just not right. Like, we can't take a look at an issue in an isolated way, because everything is connected. So why am I saying that the issue around insurance might impact your ability to either purchase a home, or it might impact your cash flow if you currently have any type of investment portfolio? So I want to come here and just quickly do a breakdown of what a mortgage typically looks like. So usually you have principal, which is the amount of money you borrow, and then you have to pay for interest, because obviously no one is going to lend you money for free or anything like that. And there is something that is called escrow. So the escrow is composed of insurance and property taxes. So this, if you happen to have a fixed rate mortgage, this stays the same. It will not change throughout the entire tenure of the mortgage. Call it 15 years or 30 years. But this, the escrow account, changes every year depending on market conditions. So this is why you hear some people saying, well, I bought a house with this fixed mortgage and all of a sudden my mortgage went up. What did the bank do? The bank didn't really do anything because the term of the mortgage was fixed. However, there are other variable costs that are part of your mortgage payment, and this is the insurance and the taxes. So the taxes, they may or may not change every year, and it's they change in tangent of the on your property value. So let's say, for example, if your property value went up, that means that chances are the taxes could possibly go up the next year, if not the following year. And same thing happens to insurance. Insurance premiums do change depending on the level of risk. So because of this, owning a property, whether it's your primary residence or investment properties, are becoming a little bit more difficult, so to speak, because now you're going to have to factor in the increased cost of insurance, and that could either eat into your cash flow, or it might just simply make things more costly for you, and that means you either have to find an additional source of income to cover that additional cost, or just simply limit and cut on some other expenses so you can shuffle your money around and be able to continue to afford that home. So I just want to make sure that I have all the notes covered because I don't want to skip anything. All right, so back to this article right here. And let me just make sure. How do we do this? Let me just switch back. Nope. Still playing around with this high-tech thing. All right, cool. So this portion right here, I want to bring your attention to this. So insurance are buying reinsurance policies to limit their risk. And so what exactly is reinsurance? So I had to really look the things up to be able to make sure that the information was accurate. So a reinsurance is an arrangement whereby an insurer transfers all or part of a risk to another insurer to provide protection against the risk of the first insurance. So long story short, reinsurance is basically you buying an additional insurance policy to cover your existing insurance. And so the purchase of that insurance doesn't happen on your end. It actually happens on the back end, meaning that if I go to you and you're an insurance company and you're insuring my property, one way for you as an insurance company to protect yourself is to shift that risk to another insurance company. So you buy insurance to protect your risk in the event that I had to submit a claim and you're going to have to make payments. So that practice had allowed insurance policy to remain affordable because that means that me in this case as the customer, I don't have to bear with the entire cost of the risk that I've been putting on that policy. And because the reinsurance it's a market, it's becoming a little tight on their rules. It was just simply becoming a lot more difficult to buy reinsurance and to transfer that risk. And that means less coverage for you, or you just have to simply pay a higher premium in order to get that protection that you need. Now, I want to highlight something. Buying property insurance is not a law, meaning it's not mandatory, it's not required by law. However, if you were to buy a property with a mortgage, chances are that lender will require you to have some type of property insurance in order to protect that asset, because that asset, it's what's backing that money that they're lending you, meaning that if they lend you $300,000, so to speak, and you choose not to pay down the line, they can always take that property, foreclose it, and then liquidate it and use the proceeds to cover the loan that they gave you. So insurance is not mandatory, but the lender will sort of like make it mandatory for you. Okay, insurance buy reinsurance policies to limit their risk. After suffering a sharp drop in profit, reinsurers raised rates and cut coverage at the start of last year. That hit home insurers, making it harder to manage their losses from storm and other extreme weather events. Remember, everything is connected. We're going to get to that in a little bit. Many of them pass on their higher costs and reduce coverage to their customer, which is exactly what I explained. So for those who are interested or curious, if you happen to either reside in one of these areas or if you happen to have properties in one of these areas, this is kind of like a way for you to see whether you're affected or not. And so what I found interesting is that Texas, Arizona, and Utah are the states with the highest increase of premium. And I think that also had to do with the fact that during the pandemic, a lot of people migrated down to those states. Florida too, but surprisingly, it looks like Florida has not seen any major increases in comparison to these other states. Yes, it still went up somewhere between 10 to 15%, but when you look at Texas, Arizona, and Utah, we're talking somewhere between 25 to 34% premium increase. So if you come to think about it, during the pandemic, a lot of people were working from home. Some people decided that, hey, I don't have to live in New York City or these major metropolitan cities anymore because I don't have to go into the office. So I can basically just live anywhere and work anywhere and still have a job. So a lot of people, and I'm sure you've seen that in the news, migrated to these states where they were offering more flexible pandemic perks, so to speak. You don't have to deal with having a mask. Vaccination's not mandated at the time. Obviously, things have changed. But if you think about it, the more volume you will see in an area, the higher the risk, right? Especially if they happen to be working from home. The more you stayed in your home, the higher the chances that you could either forget to turn the water off and then there's a leak, or that maybe you forgot that you were cooking something and next thing you know there's a fire. So a lot of things can happen the more often you stay at home. So take a picture over there, or you can always rewatch this episode later on. And if you're finding value right now, feel free to share this episode to your friends or someone who you think might find this information useful. So now, let's just do a quick drawing that I have here that I wanted to share with you. And I apologize for the noise. We have a lot of people. We live in New York City, so everything is noisy. All right, so reinsurance. We talked about the concept of reinsurance. So I wanted to take this and do an analogy to help you get a better picture of things, right? So when you purchase a property, you will realize that the lender will require a down payment. So that down payment could be 5%, it could be 20%, 25%, depending on the type of program that you're signing up for or that you're using. So the lower the down payment, the more insurance you need to buy. So you need to buy a property insurance, and you also need to buy a PMI, which stands for private mortgage insurance, right? But once you get to that 20%, you don't have to buy PMI anymore, because now the way you looked for the lender is that now you're putting 20% down of your money. So that means there's less of a risk for them to finance you, because now they have to put only 80% of their money to help you finance that property, as opposed to 95%. This makes a big difference. And I mean, the more money you put down, the less risky you become. So when it comes to reinsurance, it's sort of like the same thing. So you buy this insurance policy and you use this insurance to cover the property. Now the insurance company is saying, well, I mean, I need to find a way to protect myself, because if this property gets into a flood, that means that other properties around the area are also going to get into a flood, right? So that means that all these 4 properties, if not more, they can file a claim all at the same time. And that means that I'm in big trouble as a company. So therefore, I need to buy an additional insurance over here to have this company help me cover the risk. And so that way I can rely on them. So what's happening in the bigger picture is that it's becoming more and more difficult, or reinsurance has become a lot more expensive, which means that now there are either 2 choices. The insurance company can fire you as a customer, or they would just simply charge you more and more. But the fact that they get to charge you more for the premium does not necessarily mean they're going to be solvent to pay for all of these claims if they happen at the same time. So that's why a lot of insurance companies are actually either increasing their premiums or moving away from certain areas that are considered high risk. And And the thing doesn't end here, right? So how does insurance work? The way the insurance company work when it comes to filing a claim is that the check that they get to cut out to you is based on the replacement cost. Meaning, what's the cost that this individual, this homeowner, is going to have to incur in order to build the property back up to the way it was. So when you think about all the costs associated to that, that goes beyond just a simple material. You have to pay for labor. And I'm sure you know that with today's inflation, labor has also gone up in value. So that means it's going to be more expensive to hire somebody to work on whatever renovation project you have. Same thing with lumber or any type of material. The material has gone up because the labor that is needed to get them or to transport them has also gone up. And let alone the whole issue about doing the actual project. So all of this gets factored into this whole replacement cost. So if we're talking about multiple properties at the same time filing a claim, let's say up to $200,000 each, we're talking about a total of $800,000 just for these 4 properties. And if your insurance has been charging you somewhere along the lines of like $15,000 a year, and you multiply this by 4, there's no way this will cover this. And this is where reinsurance comes into place, because they get to shift that risk and in hopes to share that risk and maybe become more solvent in the event that claims need to be filed, right? So let's see, just want to move back into the article to see if there's something else that is worth highlighting. Let me see over here. So we have the map. We're back into the map. So once again, the unregulated global reinsurance market is a significant driver of the high cost of property coverage across the country, including in Houston. Remember, this problem, as you can see in this map, does not only affect Houston or like the coastal areas in Texas. As you can see, it is affecting everywhere in the country. It's just a matter of where you're located and where you're gonna get impacted the most. And then, so just down here, there is a coverage that talks a little bit more further, but I think I already covered that in the illustration. Reinsurance lets insurers sell policies in vulnerable areas without the risk of being wiped out by one big disaster. So we actually got that cover. I think this is pretty much it when it comes to the article in itself. Now, let's go to what can you do, right? In the event that something happened to you and you really need to cover or file a claim. So if for whatever reason you ended up hit with a natural disaster, the sooner you file the claim, the better. Why? Because it's all about velocity, right? So if you happen to be the first 3 people who file a claim, then guess what? You're first in line and the insurance company is gonna take care of you first. But if you wait a week or 2 to file that claim, guess what? You are going to have a lot of people in front of you, and chances are that by then there's going to be a backlog of claims that the insurance company will need to get to, and you're going to have to wait a long time. So file a claim ASAP. The sooner the better. And then you are going to need to provide a report. So if there is a flood, then you probably need to call a plumber. If there's a fire, then you need to call the fire department. If there's burglary, then you need to call the police and so on. And so that way you get that report and then you provide that to the insurance company, and then you make yourself available so that when they send an insurance point person to evaluate the property or to handle your case, that you provide them as much information as you can. Remember that the communication has to remain open. So that's in the event that something happened and you need to file a claim. Now, let's say you are currently in the market to buy a property and you're trying to figure out how you can best maximize that premium so that way you will end up with the lowest mortgage payment possible. So the best way to go about this is to go straight to a insurance broker. Why do I like to work with brokers all the time? Well, because they're a one point of contact that you are going to deal with, and then this person is going to go out to the different insurance agencies to find the best quote possible for you and hopefully provide you with the best premium possible that can adjust to your budget. That's one case if you are someone who's new. Another thing that you can do is to negotiate with the seller. So let's say, for example, if you do a property inspection, all of a sudden you find this property that, you know, the roof is good, but it will need to be replaced within the next 2 years. Well, so guess what's going to happen to your insurance? It's going to go up, because that means that if there's only 2 years left of life in that roof, that means that there is a chance that something is going to happen in the meantime, and that means you're going to have to file a claim. So you can actually negotiate with the seller and request some type of credit or discount on the price to kind of like offset whatever repairs you're going to need to make to the roof, or even the replacement of that roof. Now, that's for someone who is currently in the market buying a property. But what happens to those who are currently in the market owning properties already? So in that case, the analogy is somewhat similar. So if you have properties that are coming due of some type of renovation, check out to see if those renovations can provide you with a discount in your insurance. And aside from that, by you doing the renovation, you're actually increasing the value of your property. So I don't see why you will end up losing. It's actually a win-win for you. So typically what I do, it's when it comes to time of renewal, I speak to my insurance broker and I ask them, well, what changes can I do in order to minimize the insurance premium? And sometimes they will provide you the answer if there is one. If there's none, then it's still all a matter of shopping around. When it comes to renewal, just see if the insurance renewal is coming up at a similar premium or coming back a lot more expensive. And if so, then ask your insurance broker to see if they can shop around for another insurance, because sometimes company will provide you with discounts if you're a first-time customer. They're trying to
Rape ears.
Yeah, sorry, they're trying to gain as many customers as possible, so chances are they're going to lure you with some special discount or offer to bring you to the door. I don't know what's happening. I guess allergies. It's happening. Yeah. So sorry if I was too loud during my sneeze. I just cannot contain it. I think this is pretty much it in terms of the insurance. Thank you so much, everyone, for connecting. Now I'm going to open up the floor for any questions that anyone may have around the insurance. But bear in mind, I'm not an insurance expert, but this is something that I felt the need of sharing because I had a couple of policies that came due to renewal, and they came back significantly higher. So that prompted me to dig in a little further, do some research, and basically just ask my broker for questions. And then those are some of the solutions that I share with you today, were some of the solutions that were provided by my insurance broker, and hopefully that could be useful for you guys as well.
All right. Hello, everyone. This is my time.
Awesome.
Thank you. An applause to Lucella.
Rice co-founder.
And let's see. Okay, so please start putting your questions on the chat, and she'll be able to answer them. Okay, thank you. So we have Spencer Gordon. Thank you for joining the call today.
Hi, Spencer. Thank you so much for joining. Yes, I mean, according to this article, it looks like reinsurance it's one of the many issues. It's not the only issue. Everything ties back, right? Like if you come to think about it, let's see. So if I have, let me just switch it over to the tablet right here. And so it's all a matter of risk and what's happening in the environment around you. Okay, this is really getting to me. Here, there you go. Okay, so everything is connected. So think about this as a cycle, right? So you first, most people are blaming reinsurance, but it's not an isolated issue. Yes, reinsurance help to minimize some of that risk, and it helps shift some of the liability, some of the risk, and also reduce some of the costs. But lately, I'm sure you've seen in the news that we're getting a lot of natural disaster, crazy storms, flooding here and there. So like this starts adding volume claims here and there. So you got one house that got flooded, then you got another house that got flooded. And then all of a sudden, when it's come due to renewal, guess what happened? Just like you as a customer get to renew your insurance policy, insurance company, they also have to renew their reinsurance policy. And so if they don't want to cover this, right? So let's say they, no, I don't want to cover you, then guess what? Then everything's going to come and get back to the insurance company, and they're going to have to make a decision. Do I take this customer and risk a claim and charge them more money? Or do I choose not to take this customer, but that means a loss of revenue for me? So one way or the other, the insurance company are somewhat tied. They're kind of like back against the wall. They don't really know necessarily what to do. And then there's you, the customer right here, right? So now you have to pay high premiums for a last resource insurance that might not necessarily cover all of your needs. And speaking of last resource insurance, I forgot to mention that a last resource insurance is basically the insurance that comes into the rescue at the end. Nobody wants to work with that insurance, but they're there. They're there. And one popular name of a last resource insurance is Citizen. They've been around typically in the South. I have used Citizens in my insurance, and so far I haven't had any issues, but it is considered a last resource insurance. I'm just going to pause that right here.
So we have some people watching right now. So we want to say thank you to Esther, watching from Instagram, and Ashley. Thank you for watching, and as well, Michi, Shanna. Thank you for watching this video.
Watching.
Yep.
So
anyone else has
get a
any
bunch
comments?
of likes, so that's good. But either I did a pretty good job covering this up, and there's no additional questions, or yeah, I'm just gonna pat myself on the shoulder. I did a really good job. That's why there's no more questions. So if there are no more questions, we're just gonna pause here because we have to prep for another meeting. But if for whatever reason you're not tuning into this live, and let's say you're watching this live later on, you're more than welcome to leave your question down in the comment section, and we will answer your question then afterwards.
We have a question from Ether, I believe. I forgot that. Okay. So, ECCD. Okay. So she says, I am in Florida. We just got the news that by 2025, the insurance is going to go up 14%.
Oh, yeah. Thank you for sharing that. That's unfortunate. But remember that everything is cyclical. Like I said, try to see if there's a way for you to get in touch with your insurance company and see if there's some modifications or some upgrades that you can actually do to the house to make it more resistant to whatever natural disaster you're prone in that area. It could be flooding, it could be hurricanes. I mean, besides from getting a discount and your insurance premium, you are also doing some work in the house, which eventually will translate into an increase in value. So hopefully that helps, and sorry for the bad news.
Yeah. Okay. I think that will be it for today. Thank you so much, guys, and please don't forget to share this video. We appreciate it. Thank you.
Thank you. Take care. Bye-bye.
Take care. See you.